Welcome to the WION podcast, where we explore fascinating stories and ideas from various fields. In this episode, we unpack gold and geopolitics and explain why countries hoard the metal at a time of wars, sanctions, and economic uncertainty. From frozen reserves to de-dollarisation, gold is quietly reshaping global power and financial security. Gold serves as a traditional safe haven asset, retaining or increasing value during economic collapse, currency devaluation, and political instability, unlike fiat money. Research confirms gold functions as a robust hedge against currency fluctuations, providing portfolio diversification during extreme market stress. Investors shift to gold during crisis periods, reducing downside portfolio risk and enhancing value preservation capabilities. Western nations froze over $300 billion of Russia's central bank reserves in February 2022, the largest financial seizure in modern history, demonstrating currency vulnerability. This event prompted countries worldwide reassessing reserve strategies, recognizing foreign currency reserves face counterparty risks. Russia subsequently prioritized gold accumulation, reaching 75 million ounces, worth $229 billion by April 2025, offsetting frozen assets. BRICS nations are actively accumulating gold reserves, shifting away from dollar reliance, with Russia holding 2,336 tons, China 2,298 tons, and India 880 tons as of 2025. BRICS launched gold-backed unit currency October 2025, pegged 1 gram gold, backed by 40% physical gold and 60% national currencies. Alliance controls approximately 50% global gold production, signaling increased economic leverage, challenging dollar dominance. Gold stored in national vaults represents tangible asset-free counterparty risk, immune to electronic sanctions, unlike foreign currency reserves vulnerable to digital freezing. Physical gold enables international trade, bypassing dollar clearing systems, reducing currency exchange risk and independence from U.S. monetary policy. Alternative trading relationships utilize gold-backed transactions, creating structural financial system changes. Central banks purchased 710 tons of gold in 2025 alone, representing historic accumulation pace driven by geopolitical risks, monetary autonomy desires, and de-dollarisation. Three-year trend shows 1,136 tons 2022 purchases, 1,051 tons 2023, and 1,045 tons 2024, sustaining 15-year expansion streak. By October 2025, central bank gold holdings exceeded U.S. Treasury reserves for the first time since 1996, signaling fundamental portfolio realignment. Dollar share global reserves declined 58% by 2024 from historical highs as central banks diversified, reducing concentrated currency risk exposure. Gold's low correlation hedge provides critical diversification benefits during fragmented global markets. Emerging markets lead accumulation, countering sanctions, currency, volatility, geopolitical pressure through independent monetary strategies. BRICS nations creating gold-backed systems and alternative payment mechanisms, challenging Western monetary dominance and reducing dollar dependency for international commerce. Infrastructure development supports BRICS Pay, local settlement solutions, and independent pricing platforms, circumventing traditional dollar-controlled financial networks. Long-term currency planning reinforces multipolar financial system architecture, limiting unipolar dollar hegemony. Substantial gold reserves signal financial strength, stability, and sovereignty to investors and global trade partners, boosting confidence during external economic shocks. Physical gold provides psychological security, supporting currency credibility, independent government policy decisions. Nations leverage gold holdings, demonstrating monetary independence and creditworthiness, attracting international commerce and investment. Sustained geopolitical fragmentation and intensifying monetary independence desires project continued gold accumulation, driving prices above $3,800 per ounce, with mining constraints limiting supply. Analysts expect further de-dollarisation acceleration as sanctions resistance mechanisms prove effective, encouraging similar approaches among geopolitically pressured nations. Gold's strategic asset repositioning fundamentally reshapes global financial architecture toward multipolar systems. Thanks for tuning into this incredible story. If this episode resonated with you, don't forget to hit the like and subscribe button for more captivating stories to come. Stay tuned.